All right, guys, I'm trying to figure out what's going on here. I see somebody's comments. Everybody see everything and hear everything, just to make sure that we're good. Hey, guys, can you hear me and see everything? Okay, nice, because I cannot see it on my computer. All right, how's everybody doing? What's going on? We got a nice winner on USD JPY. Got a nice win on USD JPY uh, this morning, like not too long ago. They opened this trade like 30 minutes ago. As you can see, the second target was US was 1 to 2. The last target is 1 to 4. Beautiful trade. Um, I just want to make sure everything is cool so I can do my analysis without any interruption. Okay, I don't know why it says that I'm somebody else. Okay, I think it was some kind of mistake. I'm not Andy, but I mean, we can continue and keep doing what we're doing. So yeah, all right. How's everybody's morning going on so far? How's everything? Have you traded any pairs yet? Yeah, gold. I'm about to do gold. You'll see. This is the gold chart. I'm gonna do it all over again so you can see what I'm looking at exactly. All right. So gold. I'm gonna delete everything and start everything over again so you can see the way I do my analysis. You'll see the way I look at the charts and the way I trade. So pay close attention. I'm the type of trader that likes to keep everything very simple. So you have enough energy to deal with your emotions rather than putting all your energy towards the charts. So that's basically my mindset towards the markets. And I always, when I do a top-down analysis, I always start with the monthly time frame, and the monthly time frame helps me indicate the magnet zones. And what are the magnet zones? The magnet zones is a very simple thing. And the way I explain it is basically if I have this as my magnet zone and this as my magnet zone, if the price breaks below this, then my next overall target and bias for gold is going to be the next magnet zone. So basically, I'm going to be trading short positions until we reach this magnet zone. Now, once the price reaches this magnet zone, I wait and I see what the price does once it reaches it. So basically, if we come here and start to reject, what I'm going to do is I'm going to look for long positions until we reach this magnet zone. Now, if we come here and we break it, then I'm going to be trading down to the next magnet zone that we have here at the bottom. And I'm going to continue looking for short positions. So basically, magnet zones is nothing that, is crazy hard to understand, or it's that nobody knew about, but it's basically every time you go to lower time frames and every time you trade the markets and you drop down to 5 to 15 minute time frames, it's very easy to get lost in the overall market direction and overall market bias. So those magnet zones help me to determine the overall market movement in the longer term. So now I can go to lower time frames and look for positions on the lower time frames. So these are my magnet zones. Let's see if I have any more. Let's look at some on the weekly. I think this is a good magnet zone. Let's see. Like it more like this. Let's look to the left. We can use it like this because we had some market structure here on the left. So basically, these are my magnet zones. And if we look a little bit closer of what is going on in the markets, we do see that the price came to this magnet zone, had a bounce, failed to reach the next magnet zone, and then broke below the magnet zone. So what's our overall bias? Our overall bias for the weeks, because this is the weekly time frame, is that the price overall going to continue lower to the next magnet zone, and once it reaches it, we're going to react and see what happens next. But right now, we are in a bearish market structure. After I do that, we drop down to lower time frames such as daily, and we mark up support and resistance. So this is obviously a resistance. We have resistance right here. We have support right here. Yep, I like the zones. I like what I see here. We have a little bit more resistance right here. So now we're on the daily where we know that we're overall in the bearish market bias. Then we know that we are below resistance. The previous daily candle closed below the resistance or below the support, which is now resistance. We look at previous weekly candle. We see that previous weekly candle is bearish engulfing candle. So a lot of bearish confirmations. Now, once I drop to the 4-hour time frame, what do we see? We see that the price closed above the daily resistance. Now, what does it mean? For me personally, it doesn't mean anything until the daily candle closes above daily resistance. Because if this was a daily candle, the price can go higher, and then before the close, it can drop below. And if you look at 4-hour time frame, you'll see all this movement. But if you look at daily time frame, it's just going to be a one candle with a long wick. So basically, this on the 4-hour time frame is equal to this on the daily time frame. So the fact that the 4-hour is currently above the daily resistance doesn't tell me anything. I agree. I would rather have it below, but it doesn't change anything. We're still fighting this resistance. Now, once I drop to the 2-hour time frame, anywhere between 2-hour time frame and 30-minute time frames, I look for zones, I look for volume, I look for points of control in the markets to see where the price could resist and reject from which type of level. And right now we have this point of control. We also have this a mess of a price action, this choppiness right here. So basically, if we use this as our supply and demand plus key, because we're fighting the daily resistance, I think this is a pretty good zone where the price could eventually reject and drop to the daily support. Now, we do have some other points of control, which is up here, but it doesn't really affect us at the moment because we're pretty far away and we're looking at a 2-hour time frame. Now, if we drop to the 30-minute time frame, we can look for a little bit more precise levels. Since we're in the lower time frame, it's all the way down here. We don't see a lot of volume in this push to the downside. We can see that we do have a volume spike right here, right where the price is at right now. So I would not be surprised if the price ends up dropping. Now, why, you might ask me, why you're not looking to take a short position, why you're not entering a short position at the moment? It's because I really like to follow the trend, I like to follow the zones, and I like to follow the momentum. Currently, the momentum is to the upside, and if I did enter, I would not follow my rules and I would be entering against the momentum. So for me to enter the trade, for me to see that the price actually respects this level, I would like to see the price to break below any of these levels that we have here to shift from a bullish market structure to a bearish market structure by breaking some of the levels on the left side. So basically, this is what we have here. Levels that I see is basically 1, 2, 3, right? The one that I would be focusing on would be right here. So basically, this would be my setup to go short on gold if we do have this type of price action happening. So this is what I'm going to be waiting on gold, and this is my analysis. Pretty nice and simple. Overall, very, very bearish. Everybody understands? Anybody has questions? Okay, now we're going to look at US 30. I'm actually going to open a new tab. I think I opened the same one. We'll see. I'll show you how I analyze US 30. This is the trade that I have opened from last week. Yeah, I need to switch this. Just give me a second. Okay, whatever. I'm just going to do it like this. All right. So basically, everything is very, very similar. Now we are on US 30 chart. Let's take a look. Once again, the same thing. That's the key to consistency, is to analyze the markets the same way every day. If you come to the markets and you analyze the markets in a different way, in a different strategy, on a different time frame, on a different time, and you execute the trades differently, you're not going to have consistent results because your analysis is not consistent. You have to do everything the same way on all the pairs, and the same analysis on all of them. So monthly time frame, let's look at magnet zones. We do have one obviously here, another one obvious zone here, and another one really, really strong here. So we're looking at the monthly time frame, right? So we do have strong rejection, boom, we came to this level, boom, we had a nice bounce, right? We came to this level, boom, we had a nice bounce. We came to this level, boom, we had a nice bounce to the downside. So up to the weekly, we can maybe adjust some of the zones. Everything looks good. Now, we do have the price rejecting this level right here. But as this is the weekly time frame, so every candle represents 1 week. Now, we do have the price approaching this level once the whole week and the whole another week, and the price failed to break above this level. So this is now, it's a very interesting point, an interesting area of what's going to happen. Is the price going to break this weekly magnet and then continue all the way up to the next magnet, or is it going to reject again and then continue lower? So this is a very turning point. And honestly, if I were to enter the trades at this current moment in this type of situation, I would definitely be using a lower risk, because at this moment anything can happen. And this weekly candle, anything can happen. It can either reject or it can close above. Now, looking at the overall market structure and like setting all the probabilities of what possibly could happen, we can see that the price has been forming lower lows and lower highs for a very long time. So what can we expect? We can expect that the price is going to respect this level and then continue lower, especially with all the fundamental news that's going on in the markets at the current moment in the world. So that would be more of a smart move to look for shorts than look for longs, especially when we're rejecting this weekly magnet zone. Now, if we drop to the daily time frame, we mark up our daily support and resistance. This is going to be my resistance. This is going to be my support. This is going to be my resistance. And this is going to be my resistance. This is daily resistance again. So we can see how all these levels are perfectly respected. Resistance, 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 support, resistance and support, support, resistance, 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 support, support, resistance, resistance, resistance. So now let's think about what kind of information we already gathered looking at the markets. We have overall bearish market structure. We have the price fighting the weekly magnet zone. We have the price fighting the daily resistance. So our overall bias that more probably the price is going to drop rather than go higher. Dropping to the 2-hour time frame, we use 2-hour time frame to look up for supply and demand areas. We can also pull out a volume profile tool to see where our volume spikes, where our points of control, where we could expect the price to reverse. So first of all, we do have this supply right here. What else? We do have this demand right here. So we can expect that the price is going to reject this level and continue lower. Now, this is a more risky setup. Why? Because we do have a nice momentum building up to the upside. The more safe play for us would be if the price drops, breaks below this demand, and then we can take shorts right from this point. So we're not just rejecting all these levels, but we also broke the market structure that we have on the left. Very, very strong market structure. So that would be the most probable entry. Now, the bigger risk to reward and more risky entry would be, yes, right here. So we can drop to the lower time frames to look for zones on the lower time frames. We can look at, volume to see where we have a lot of volume. Now, most of the volume is at the bottom. That's another confirmation why we should wait for the price to break below, because we would invalidate all this volume and pressure at the bottom. Now let's go to the lower time frame. I do see a volume spike right here, right on this bearish candle. So this is a probable setup if the price goes here and respects it. Now I can delete this so you can see it more clearly. This level right here. So I'm gonna set alert. I'm gonna see how the price reacts to it. Like one of my mottos, the way I think about the markets, I never guess. Like I never set orders, and I never be like, oh, if the price touches this level, it's gonna drop. I never do that. What I do is basically I wait for the price to go to my levels. I wait for the price to show me that it wants to go. I want the price to show me that it wants to reject, and only then I enter the markets. I always wait for the market to prove me that my analysis was correct. So this is my analysis, and this is what I'm going to be looking for on US 30. All right, guys. Give me a second. All right, what you want me to look at next? Pretty nice and simple. USD JPY trade. Have it opened. 2 targets. I called it out. Also, check out my Instagram. I do post a lot of, reels, educational stuff on my Instagram. So go drop a follow. It's down at the bottom. DovyFx. Um, yeah, I called out this trade. Pretty nice trade. Second target was hit to 122. Still running. Potential 1-4 risk reward trade on USD JPY. Everything is very similar. On top of all the analysis and all, as you can see, all the volume that we built up here is very, very overbought market conditions. So if we look at the daily time frame, you can see how crazy of a bullish momentum this is. Now, another very interesting thing that I want to show you about USD JPY is a huge inverse head and shoulders on the monthly time frame. So by looking at this price action, I do expect, like, I don't know if it's possible because it's so bullish at the moment, but it could be a scenario where the price comes all the way down here to retest this inverse head and shoulder neckline, which is left shoulder, head, right shoulder, and then continue higher. Does everybody see that? Currently, it's very, very overbought. All the RSIs, the monthly RSI is overbought, the weekly is overbought, daily is overbought, 4 hour overbought, 2 hour overbought. Like, I do expect a drop even bigger than this uh, in the longer term. GBP USD. Okay, let's look at GBP USD. Let's do some analysis. Let's look at monthly. So we have our magnet zone. That's a significant. As you can see, it has been rejected. Now we can look for other magnet zones. The one I really see is right here. As you can see, multiple rejections throughout this whole price action period. But you cannot see. I don't know why it's kind of disappearing here. Hope you can see it. So we have our magnet zones down. Let's look if we have some on the weekly that sticks out. Yeah, we can adjust this one a little bit. This is another one. So rejecting off the weekly, I do expect overall bias setting this to retest this magnet zone. So I do expect upside to about 1.19 with a little bit more, 1.1, 1.2, somewhere around 1.2 overall bias on the longer term. On the daily time frame, let's mark up daily support and resistance. Resistance. This is support. So for me to enter the trade, I would love to see the price to break above this resistance. Right now, buying this market structure would not be smart because we're so close to this resistance, and the price could definitely just come to this resistance. Let me zoom in a little bit. The price could definitely just come into this resistance, reject, have a retrace, and then bounce. So buying high is a bad idea. You want to buy low. So now, if you were to enter long position, I think this would have been the best place to do it. Now, we can look for supply and demand areas. We can look for potential setups. Now, we also do have a gap right here that I wouldn't be surprised if the market comes back to fill it, especially if it happens in New York Open, which is in 5 minutes. So it could definitely happen. We could definitely see a drop. Now let's look at some volume, what the price is doing. We do have a big volume spike on this nice demand. So if this happens, we wouldn't just fill this gap that we have on the left, but we also would have a nice retracement that I was just talking about. So let's pull out a Fibonacci. It would on top of that also be a 0.618 retracement. So I think this setup would be probably the best scenario for you to enter, is if the price drops, retest this demand right here. Why is this so? You can't even see my fibs here. So basically, drop to the 0.618 and demand, and then you can take long positions. So gold, I already did gold. I already did gold, right here. And that's what I expect on gold. That would be the highest probability setup. It's fixed range volume. It's right here at the bottom. Fixed range volume. Once again, guys, if you haven't yet, you can check me out on Instagram. I do post a lot of reels and stuff. All right, and for this stream, we're gonna do open of I'm gonna trade for 15-20 minutes on New York Open. I mean, like at this moment, I don't see if I will be entering the trades right on the open, because I don't see any setups that could confirm very quickly and very soon. US 30 could be the one that confirms. I'm looking for something like this. Gold, I want a significant drop. GBP USD I just talked about. I do expect a big retracement, so it could take a while. Now, for me, I'm personally, I'm not Andy Peters. I think Cam made some type of mistake on these live streams, and for some reason it messed up. And I think he's gonna be doing this stream tomorrow. So it was some kind of mistake. But yeah, it was my turn. Cam invited me to do this live stream, so I was like, yeah, let's try it out. I'm surprised that it's only 36 people in this live stream. Okay, now if we look a little bit closer to US 30 chart, what do we see is that the current 4-hour candle does not have a wick at the bottom. So we could see the price touching this demand and then going lower, finally to form that wick at the bottom of the 4-hour candle. Also, the 1-hour, yeah, this could be the case. There we go. New York is opened. I'm looking for something like this. This is the potential move. We'll see how it plays out. Once again, I do not enter once the price touches the zone or order blocks and stuff. But what I do trade is logical facts that I see on the current price action. So I will only enter this trade if it shows me that it's rejecting and it's respecting my zone. right. Anybody has any questions? Euro USD. Let's take a look. Oh, this is bad. Daily support and resistance. Oh, this is very, very choppy. That's not something I would be trading at the moment. This is super choppy. It's more like a trend line direction rather than a support and resistance. Because like it's, I don't know, something like this as support, as resistance, but totally not clean. Um, yeah, I would not be trading this. It's just ugly. Let's do it anyways. We're fighting the magnet zone. I do expect the price to continue higher, at least to this resistance. Guys, I'm not gonna do analysis on this. This is too choppy. This is just a nightmare to trade. I would not be recommending you to trade this. It's very, very, very bad. This is more like it. So we have approached our volume, a little volume spike. It's not very significant here on the left. As you can see, you cannot compare this and this, but this is the area that the price formed a volume spike uh, comparing to other areas. So we could see a reaction here. Now, if this breaks above, this would invalidate my trade setup, and I would probably leave this alone for the day because, like I said, we are at a daily resistance. So, what's bothering me is basically we are at a daily resistance, but we do have a strong momentum to the upside. So, at this moment, this would be just gambling, guessing. Is the price gonna reject this resistance and like mess up all this momentum to the upside, or is the price gonna not respect this resistance and is just gonna continue higher in this bearish market structure? So this would be just gambling. If the price breaks above the zone and you look for any trades for longs or for sells, uh, or for longs or for sells, it just would be gambling, to be honest. You want everything to be on your side. You don't want to be guessing, like, because that's the only way to get out of it. I have such a hard time identifying zones. You make it look so easy. Um, it's just 5 years for every single day of my life. I would say almost every single day of my life. At least I was sick or like on some vacation or in some wedding, but almost every single day of those 5 years spending on the charts. That's the craft. It is not hard. It's not hard. It's the hardest thing in trading is actually realizing that you need a trading plan and you need to follow that trading plan no matter what. You have to go to the charts and go to your computer every day with zero emotion. With zero emotion, no matter if you had an amazing day yesterday or a worst day of your trading career yesterday, and it has to be zero emotions. And that's the hardest thing to do in trading, I believe. And that's the only way you're going to be successful. Oh, my bad, guys. Right, so we do have a very nice momentum. We we can see how the price respected this magnet zone right here, a bunch of wicks. I don't know if you can see it. This sucks. I don't know if it's the stream or what, or my widescreen monitor. I don't know why it's like that. I'm trying to show you, but my bad, guys. So yeah, I mean, now if the price breaks this level, I'm gonna leave this alone because I don't want to be guessing what's gonna happen. And if the daily candle closes above this daily resistance, that would tell me that okay, the daily resistance was uh, invalidated. Now it's a daily support. We're gonna come back to the zone, grab this volume, and then go to the next resistance. Or even if we look at the bigger picture, go to the next magnet zone, right? But until this resistance is broken with the daily candle closure, I'm gonna stick to my bearish bias. Now, this would have been a nice trade right here of this point of control of the volume, also rejection of the demand. But since we were coming off this daily resistance, I was not confident because the price could have just continued lower to the next support. Now, if the price breaks above the resistance, that means we are on the way up to our next resistance. Now we can look for longs. But since the price came to resistance and started moving down, my overall expectation and bias was that the price is going to continue lower to the next support. That's why I wasn't looking for long positions here. And I was also in the short position here from the last Friday, last week. Very, very simple. What GJ open? What are you talking about? So these are the trades I took today. The GJ, I got stopped out. And then USD JPY, it's running a nice profit. Oh, wow. Here we go. So this trade is running risk-free at break-even, stops at break-even, but is dropping nicely. So far, around 1 to 2.5 risk to reward and profit. Final target is 1 to 4. Called out this trade in my group. So might be a nice trade right here. All right, guys, we'll see how this 15-minute candle closes in this area, this gray area. And if it closes above, I think I'm going to be done for the day because my setup will be invalidated. Still have a nice USD JPY trade running. Wow, what a drop. That's perfect. And yeah, I'm gonna be done for the day. So basically GJ stop loss -1 risk to reward, and USD JPY if it hits my final target, this would be 4 risk to reward. So overall for the day would be 1 to 3 risk to reward between two trades. So basically, one last thing, what I do with the bigger time frames, it's not on the monthly, on the weekly, it's not just the, it's not just the magnet zones, but it's also a overall bias by looking at the candles. So basically, if you see an overall bearish engulfing candle on the monthly, you can expect that it's more likely that the next monthly candle is going to be bearish, right? So basically, if we have a bullish engulfing candle here, we can expect that the next month is going to be bullish candle as well. If we have a bullish candle engulfing, we can expect it's not like we can expect, it's more likely that the next candle is going to be bullish as well. So basically, it's not just marking up the magnet zones, but it's also having an expectation of what could happen in the longer term. So now, when you go to the lower time frames, it helps you with your overall perspective in towards the markets and towards the direction of the markets. Same thing with the weekly, same thing even with 4-hour time frame candle, right? So if we have a bullish engulfing candle on the 4-hour time frame right here, we can expect, and it's more likely that the next 4-hour candle is going to be bullish. If we have a bullish engulfing, it's more likely that the next 4-hour candle is going to be bullish. So now once you go to the lower time frames, your probabilities are bigger than lower, better than worse, of being right. Oh, nice rejections on gold. Nice rejections on gold right on this volume spike right here, as you can see. So if we break below this point of control and also break below this market structure, I really believe the gold is going to continue lower. Now, once again, like I just told you, if you go to the weekly time frame and you see a previous weekly candle, you can have expectations what the next month or week has for us. So we do have a bearish candle. It's more than less likely that the next candle is also going to be bearish. Now we do have some rejection here on this level. So this could be a bullish candle or weak bullish candle, but it's more likely there's going to be a bearish candle. Now, on top of that, we have all this bearish market structure of lower lows and lower highs. And also, if the price breaks below this, it just confirms more bearish strength. Nice rejections of the demand, of the supply, I'm sorry. All right, I want to see how. Nice pin bar to the upside. Let me zoom in for you guys. All right, guys. Anybody has questions? Nice. On the US 500, we can see how the price is also rejecting the supply, but also rejecting the weekly magnet zone. but it's still a very, very big momentum to the upside. So it's pretty risky to enter at this current position. All right, everyone. I think I'm gonna be done for the day. I don't like the price action at the moment. Just like I said, we are going with a lot of momentum, but we are also facing a very strong daily resistance. So basically, at this moment, anything can happen. The price can use this momentum to break it, or the resistance can be strong enough to break this momentum and push the price lower. It's not something I prefer, not something I want to put my money on. And I think I'm going to be done for today. I do have a nice USD JPY trade running. Thank you for checking out. Once again, you can check out my Instagram, DovyFx. You can reach out to me if you have any questions. Um, I will talk to Cam to see about future live sessions, and I might see you soon. Thank you for watching, guys.